All right. Hey, everyone. Mark here, Mark P Markets. Hey, thanks for joining me for another Bitcoin day trade setup session. Also, we'll try to take a look at some other markets at the same time while we're waiting for any type of setups that we can possibly trade on Bitcoin. Now, these are paper trades. Okay. I'm not putting these on a real account. This is a valuable exercise for you to get a good idea of how to day trade such a market and really to get a grasp of the day trade mentality. At the same time, we'll be looking at the swing trade time frame and updating some of these chart ideas here and some perspective that we can get some perspective so we can also shape our swing trade expectations as well. I'm going to be jumping back and forth between the two frameworks, so it may be confusing. I do not suggest day trades for beginners. Okay, you really should begin with this larger time frames first. I know no one's going to listen to me, but anyway, that's how it should be. So let's get this thing started, shall we? All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, now, so first things first, so you know how the session is going to run here. Now, one thing I just want to mention real quick, if you're not an 8cap customer, 8cap is an Australian Forex and CFD broker. They trade a whole lot of instruments, okay? They are regulated and they are a pretty reliable broker. So far, with the experience that I've had with them, has been very positive. So if you're interested in that type of thing, there's a link in the description. Let me know if you become a subscriber, a customer of theirs, because it's always helpful for me to give them valuable feedback. Also, if you're interested in my perspective and how I come up with these ideas and where they come from, I have a training program, and that program, the goal of the program is to help you to become objective, and it focuses your attention on only the information that I find that matters. Most information in this game does not matter. Okay, so Bill put a very interesting thing in the learner in the learning resources channel that we have over on the server, which I'll mention in a second. But he talks about coin flips, and he talks about the whole random nature thing. Very, very interesting. That is what you should be learning as a beginner. Okay, how the probability works. And I have something to say about that, but really valuable stuff there. Okay, and that's available for free. You can find that in the learning resources channel in the Discord server. Okay, you can become a free member. It's right there. You can click on the link in the description. There's a link to it. If you want to become a paid member, there's a link to that as well. Okay, so you can check that out. Paid members, I'm going to have, like I've been talking about, I'm putting together the speculative growth portfolio for next year. And in that portfolio, I'm going to be sharing detailed information like what the allocations are going to be, right, for the $10,000 portfolio, how it's going to be organized, how the purchases are going to be timed, and all that other stuff. All right. I'm not sharing that here for free. That's only for active investors. All right. So let's just make sure that that's clear. All right. So let's get into the charts. And let me just say hello to my people here. I got Stian. Hey, good to see you, Stian. Blew out of that garbage euro trade. Man, I think that euro trade has to do with oil. I really suspect that's an oil. It's a function of oil because oil has been getting hammered. And now, as you can see, oil is trying to find a bottom there, and euro pulls back a little bit. I'm not going to be in a hurry to short that thing again. Maybe what I'll do instead this time is just buy oil again. We'll see. But anyway, hey Bill, good to see you again. Thanks for that coin flip thing. That was really good information. Hey Alice, good to see you. All right. Hey Stacy, how are you? Okay, Han, cool, good. See all my regulars here. So yeah. So Alice, I see you have a couple of questions about some stocks. I'll see if I can get into those. Right. So I spend the majority of this session. I try to keep it at a half hour, and I spend the majority of this session first coming out with our day trade plan, our Bitcoin day trade plan, and then we look at some other markets. So I can see if I can fit those in. I'll try to. Okay, so thank you for asking. Now, so before I get into the plan here, let's just take a look that trade yesterday that I had, that day trade, I banged out of it. Okay, that was a short. Okay, and it's a good thing I banged out. I mean, look at yesterday. It was a very strong day. and I took a small loss on that. There were probably some long opportunities. I mean, as we can see here on the 30-minute chart, here, let me pull this tool out here. On the 30-minute chart, I was not getting caught in that. Okay, I banged out of that thing pretty early on. Okay, and look where this thing went. That's a pretty nice move for day trades. Now, of course, you're not going to get this whole move as a day trader. You should not expect to get that. That's unrealistic and unreasonable. Okay, but there are setups in there we can find on the 5-minute chart that can, at least for one, keep you on the right side, and for two, allow you to capture something. Now, with that being said, this structure, right? I mean, we can see the bigger picture structure here is basically a series. We have higher lows, and it's trying to make the higher high, but it's not being able to achieve it yet. Okay, so now let's expand our 30-minute chart. Okay, I put the wrong chart. So let's expand the 30-minute chart. You can see I have all these lines on the chart. These are from previous analyses, okay, and you can see how the levels are relevant or not. Okay, now look, these resistance levels got blown right through. Look at that one. It's blown right through it like it wasn't even there. That's why I always tell you markets are random. Okay, so if you were a moron and you put like a limit order there to get short because it's a level, right, and the market has to do this, well, you got blown right through. The market, these levels are random. They serve as reference points, and then the market will let us know when a level becomes relevant, like this one. Okay, so we got up to that level, which was a previous resistance. It got up there and it respected the level. Okay, fine. That's the level it wants to respect. Now, in the bigger picture, this level has some meaning. All right, but for our smaller picture purposes, okay, that level is clearly a place where selling activity is taking place. Look at this pin bar. These are 30-minute bars. Look at this pin bar, right? A lot of people got caught in that one thinking it was breaking out. All right, those are morons following their RSIs. That's what I'm going to call them, because who else buys into something like this? They're reacting. They can't control themselves. Okay, they're reacting. They get caught. So now they get caught, and then they all have to bang it out at the same time. As a day trader, that is the way we make money. These people that made this mistake, that's where our profit comes from. Okay, we don't want to be one of those people. We want to capitalize on those people, and that's the herd. The herd is your common moron, mindless trader who does not know what they're getting involved in, and they have no business putting on day trades. Okay, that's most people. And by the way, we all start out that way. I started out that way as well. And it took me a long time to get that type of behavior out of my system. And that's really a matter of self-control and being aware of what information carries value and what information does not. And I can tell you, most information does not carry any value. So anyway, so we're formulating our plan here, right? We want to get an idea of what's reasonable to expect and what side should I be leaning toward. Now, I always tell people as day traders, you have to have an open mind to both sides of the market, okay? But if the market tells us that there's a bias, well, it's helpful to lean on that side. Well, this structure right here, okay, we have this structure right here. I mean, that's bullish. It's a bullish bias, all right? That means support levels are likely to hold. Where's our next support level? It's this old resistance right here. Now, again, these levels are not precise. They serve as reference points. So, I mean, look at this. Just going back to this area right here. I mean, it touched this level a number of times previously as a resistance. This was an extreme resistance area back here, okay? As you can see now, it's acting as a support, okay? Look at the tails it's touching that level and it's acting as a support, and we have an inside bar as a result, okay? So people are buying there. Those could be shorts covering, whatever. It doesn't matter why. What matters is people are buying there. That's all we need to know. Okay, that's a support level. It's generally a bullish structure on this time frame. So I'm leaning toward longs, okay, based on that idea. If this thing turns out to be a long, I'm targeting this area. Okay, I'm targeting this area only. I'm not targeting beyond that because I want something reasonable and high probability. So that brings me over to the 5-minute chart. So basically what we've gathered here so far is I should be leaning toward longs. Now, when we get to the 5-minute chart, okay, we can still see these levels here. I'm going to switch to the perp chart in a moment when we're actually going to be looking for the setups. But I mean, look at the price action here, right? So basically what I want to see to go long is I want to see another test of this level. I want to see a test. I want to see basically a break, okay, a failure and a failure of the break, lack of momentum, right? The failed low. I would be very happy to look for longs in this area right here. This is a high probability area. Okay, so we know this in advance. I'm not going to short this. This is a minor resistance, and the market can easily turn right around here and just go right back up. So I'm not going to chase this. You cannot react to the obvious as a day trader. You cannot. You have to have your plan ahead of the market, and then the market needs to align with you. You don't assert your own ideas. This is not like, a sales business where, you assert yourself and you make more money. And that's all nonsense in the eyes of the market. This is a random game we're playing. Okay. So none of that works in a random environment. You have no control over the outcome. In fact, Bill, you know what I was going to suggest? Because you had all that great stuff about the coin flipping stuff. And I want to make a point about that here in a moment. But maybe you can find some material on game of skill versus game of chance, because I'm always promoting that this is a game of chance, because from my experience, that's what it appears to be. Okay. And there's a lot of evidence that suggests that. But meanwhile, the entire industry says the opposite, that this is a game of skill. Of course, it's convenient for them to say that because they want everyone to believe that this is a game of skill so that you're encouraged to trade and everyone else makes money off of you, right? So that might be an interesting topic to explore. And it might be maybe you find something interesting for the resources channel. Okay, cool. So game of chance versus game of skill. And there's definitions that have been set by casinos, of course, because certain games are purely a game of chance, and certain games they have determined are more of a game of skill, and how they treat those games are not the same. Okay, so anyway, might be an interesting topic. I'm curious to see what you come up with on that. All right, so now let's go to the BTC perp chart here. Now again, I go to this chart because this should be the exchange that you use, whether it's Binance or whoever. I just picked the Binance chart because it's the first one on the list. All right, but this is really who you should use. Like I said yesterday, you should use TradingView as your charting. Each one of these platforms has a TradingView integration, but the problem with these platforms is there's a lot of garbage that surrounds the chart, and all that garbage gets your attention, and sometimes you think you see things that are not actually there, and you trade. That is the whole purpose of those platforms. Like they have like the order books, and you see like the horizontal lines moving around and all this action, and it looks like there's action. It's completely useless information, but the idea is to stimulate you like a slot machine. Okay, you ever see slot machines today? They don't have just numbers, right? They don't just have they have all kinds of animations and cartoons. It's like you're in a movie practically. It's a slot machine, but they stimulate you. They want to create excitement and hope. Okay, it's a very psychological game. Anyway, so we know what to do here. All right, this is our 5-minute chart, and we're looking for setups. The setup, again, like I said, I want to see the setup either here, right, or lower. Now look at this I had an old resistance line from previously, and basically that defines our zone. Okay, so anywhere inside this area right here, I'm looking for longs. All right, now the typical guy, the typical trader who uses their RSI is going to be looking for shorts, most likely here. Okay, see what I mean? Interesting. Good thing we weren't shorting that. Right now, again, I'm not chasing this long here either. I just finished talking about where I want to go long. I want to go long here. All right, so if the market doesn't get there, what do? Nothing. Nothing is also a trade. Flat is a position. So that's what I want to see. All right, so either that. Now, if I'm going to go short, all right, since we've determined that the bias is generally more bullish, if I'm going to go short, it's going to have to be way up here. Okay, it's going to have to be somewhere up there, because I want extreme. I need, if I'm going to go against the momentum and against the bigger picture, I need extreme prices. I'm not going to go anywhere less. So that's the bias. Okay, so we'll see which way the market chooses. Look how quickly that turned into a bearish pin bar and why you don't react. Okay, so now I've been doing the NASDAQ correlation, which, yesterday, if you looked at that NASDAQ correlation, I mean, that thing was strong pretty much all day, right? And Bitcoin followed along. That could have kept you out of trouble if you know what to look for and how to use that type of information. Okay, so that's Bitcoin. We talked about it. We're going to sit here and we're going to watch the candles for actual day trade setups. Now, while we're doing that, I want to make one point, okay, about the information that Bill put out in that learners channel. Again, if you're not in the community as a free member, okay, it doesn't cost anything, and there's a channel that there's a whole bunch of information in that channel. That's the kind of information, it's got more of the academic background. That is the kind of information you should be starting with as a beginner, not the garbage that is obvious. Like, oh, look, I'm going to learn charting and I'm going to learn this. That's all, yeah, okay, that's all good, but it doesn't help you. Okay, oh, I'm going to learn how to use the RSI. It doesn't help you. The information that's in that channel gives you important perspective and helps you see through the garbage that is constantly put in your face in this game. I'm not being negative. I'm not being pessimistic. I'm just trying to illustrate to you the reality. Okay, I've been in this game a long time and it sucks, right? When you're fooled constantly and you can't figure out why you never make any money. Anyway, so here's the point. So Bill used this example of the coin flip. Okay, it's very important to understand this. And I'm not going to explain the whole thing. You can go on the channel and read that. But here's what I want to mention. So his example, he used a 3-to-1 reward risk, okay, scenario. So he would lose so he flip a coin, okay. So tails he would lose, heads he would win, right? And so tails he would lose $10, and heads he would win $30, right? So on 10 flips, he came out ahead, but he was wrong the first 7 times, right? He lost money the first 7 times, and then trades 8, 9, and 10 or whatever were positive, and he came out ahead. Now here's the thing about that. Hey, Constantinos, how are you? Here's the thing about that. So Bill used an example of 3-to-1 reward risk, right? Now, what is the reality of that in the markets, especially as a day trader? Is 3-to-1 realistic? The question is, what is the probability of achieving 3-to-1 on every trade? It's very low. Okay. I mean, I'm happy if I can get 1-to-1 or 1.5-to-1. Okay. He just used 3-to-1 as an example. So imagine how much harder it is if you're at 1-to-1 or 1.5-to-1, because we're also competing with cost, right? Especially as a day trader, you have cost. So the cost eats into any advantage or any alpha that you had anyway. So it's a lot harder. So he just used that as an example. It was a nice example, but just keep in mind 3-to-1. So okay, that's easy. I'll just put my trades at 3-to-1, and I'll risk $10, and I'll look to make $30 profits. It's going to depend highly on the instrument. Like for example, with the S&Ps, if you think, right, with the S&P futures, if you think you say, oh, I'll just risk 1 point and I'll make 3 points. 1 point is 4 ticks. Okay. Do you realize that if you put a 1-point stop on the S&P, you will get stopped as soon as you place the stop? That's how ridiculous that thing moves. Okay, 4 ticks goes like this, like in an instant. 4 ticks, it's at your stop. Okay, so that's not realistic. I mean, my typical stop on an S&P day trade, my typical stop is 5 or 6 points. That's a typical stop. Yeah, it sucks, but that's what I found to be, a good place to get out when I'm wrong on that thing. You don't want to be losing more than that. Okay. So you can't use 1 point and then say, I'm just going to make 3 points. It's not realistic in a lot of markets. All right. So it was a very good example that he used, but just keep in mind, it's an example, and you have to ask, what is the probability of getting 3-to-1? It's lower, right? That's why I always emphasize 2-to-1, 1.5-to-1. those are higher probability targets in general, especially in this environment. Have you seen the euro? My euro trades, I took 3 trades in a row. All of them were stop outs, okay? But the first 2, we had the opportunity to break even. So then there comes this thing of control where you can, your trade, the outcome of the trade, if it was up to the market, is likely to be a negative, right? Like with our oil trade. If I had held on to that oil trade, it would have been a stop out, but I came out green, all right? Because I saw the problem and I sent out the signal, get out at $80 a barrel, okay? $80, okay? It went to 71, right? In the next 2 days. A stop was at, like, I forget where I put the stop. I think it was 72, whatever, the bottom of 72, something like that. It was a 5-point stop. I managed to get out with a 2-point profit because I saw the problem. And that's where I asserted my control on the risk. I said, screw this, not going to stay in this thing anymore. I don't like that signal, out. And I took the $2 profit, 2-point profit. Okay. But if I had stayed in, it would have been a loss, another loss. Same with the euro. I banged out of that euro yesterday, got out of it, because it should not be behaving the way it is. The original stop on the 3rd euro trade that I took was 200 pips, okay? But I had no intention of losing 200 pips. That thing was going the wrong way. I took a 90 pip loss, all right? So it still sucks, but it's better than the full stop, okay? The thing is, if I was more assertive with the break evens on the previous 2 trades, then instead of losing 300 pips or whatever the total is, or 350 pips, which is still, out of 3 trades, that's still within reason to come back from, right? That's 3 trades, not 1 trade. If those 2 previous trades were break evens, right? Even though they were worth 100 pips at one point, if they were break evens, then I would just be minus the 90 pips, okay? Not the 350 or whatever it is. So that's why that is where you assert yourself, controlling risk. Okay, so anyway, with that being said, how's our Bitcoin doing here? Nothing going on yet. Nothing going on. We're watching it. So let me see what some of the comments here are. Even in some games of chance, skill is a factor. Counting. Okay, yeah. You know what? I don't disagree with that. That's correct. Like poker, for example. Poker, in the eyes of a casino, poker is actually considered a game of skill, right? But there's a very high degree, there's a very high random nature to poker. The cards are random, okay? The outcomes of the cards are random, but a skilled player can basically bluff or convince other players that he has a good hand or a bad hand. Depends on what the message he's trying to send, right? Also, he can read other players if he's very skilled, and using that information, he can control the outcome, right, to a point. Or he can win hands, otherwise he would not win. If he has lousy cards, but he fools everyone into thinking he's got good cards, and everyone folds, and he wins, right? That's an outcome he controlled, because if he left it up to the cards, he would lose, right? So there is some skill, and that's where skill can play a role in this game. But predominantly, this is a game of chance, because you have no control over the outcome. You can change the outcome, but on the risk side. Okay, so I think there's a strong parallel there, as opposed to the profit side. You can't say, well, I'm going to make $200 on this trade, and that's what I'm going to make. You can't say that, because it's up to the market. It's not up to you. Okay. Does that make sense? And and if you don't agree, that's cool. Let me know, because this type of argument is good. This is how people learn. 3-to-1 might work for swing. Yes, that's correct, Bill. 3-to-1 is more realistic for swing trades or larger time frames. I agree with that for sure. If you are playing against the house, it is a game of chance. If you're playing against other players, it's a game of skill. Okay, that's an interesting point. And that's, again, if you look at the house games, right, the casino games, the table games, or you have like slot machines, those are usually, right, there's no such thing as like a professional, roulette player or a professional slot machine player. There's no such thing. Okay, because why? It's purely chance. And you have there's no skill involved. It doesn't matter how good you are at pressing those buttons on the slot machine. It doesn't matter. You have absolutely no control over the outcome. Okay, so anyway, that's a very, very interesting point of contention, and you should really be familiar with that. As I talk about that, my numbers of viewers are going lower. So it just goes to show people are only interested in glamour and the stuff that dreams. They're only. So if I sat here and talked about dreams and say this is a skill and you can learn it and you can make $1,000 a day, I'm sure my number. Oh look, see, I got a guy. Another guy just joined the stream. I'm joking, but you know what I'm saying. Okay, no one wants to hear that stuff, but that's the stuff that you need to hear. All right, and I know I'm not popular, and no one likes me, as a result of that. But what am I going to do? I'm not going to start lying. All right. So while I'm talking about that, I just wanted to make a few of those points. And I know I'm already look. It's 25 minutes in. There's nothing to do on Bitcoin here. Okay. So we're watching it, and now I had my talk about all that stuff. Let's now jump around here and look at some other markets. So Alice, I'm going to see if I could take a look at your markets here in a moment. Let's first just take a look at the bigger picture on Bitcoin. And also I want to look at the bond market and I want to look at the dollar. All right. Those are, if anything, those at minimum, those are the markets that we should be monitoring every day. So look at Bitcoin on the bigger picture here, right? I mean, it's still stuck in this consolidation. I wrote about this on Sunday, and we're still in the tight range. And I said that anything that happens in here, or basically anything that happens in this entire range, is pretty much meaningless. And so far, the market agrees. Okay. So anyone that's getting all excited and trying to stimulate you into doing something, please ignore it. It's amazing to me how people come out with these lies and people come out and all this other nonsense and no one calls them out. Or maybe someone calls them out, but I think you can delete the messages on YouTube. So you don't see anyone saying, hey, this is nonsense. Hey, this is BS. You don't see it, but it's nonsense, right? So anyone that's calling, oh, Bitcoin's going to do this, Bitcoin's going to do that, it's meaningless in here. And the bigger picture still supports the bearish side. All this thing needs is a catalyst, right? Some kind of news comes out, and next thing you know, we're pushing the support. If we get a harsh push toward this support, I mean, I'm interested in longs around that support. If we get a very sharp push, meaning a lot of momentum, I'm going to step aside, okay? Because 14K is still in play. I'm not saying that because I'm a bear or whatever. I go with what the market tells me. And the bigger picture is what carries the weight. This structure right here is meaningless. People are calling this bull, blah, 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 blah. It's meaningless. Please, that's all I can say about that. I don't want to spend a whole lot of time on that. I repeat myself all the time with that. Let's move along here. Let's jump right over to the bond market. Okay. So bond market, you should always check every day. Bond market now has a sell signal in it. You see that? We talked about this yesterday. Porn spammer. Oh, look, he must be bored. All right, yeah. Let me remove this guy. Hey, porn spammer. Let me just give you a special message. No one clicks on your links here. I mean, no one clicks on my links. You think they're going to click on your links? Okay, maybe Bill clicks on your links just to make sure they work. Okay, that's a bad joke. I know, Bill. I keep repeating the same. I got to come up with new material. I understand. But anyway, yeah, porn guy. Listen, man. There are so many other fake gurus that you can go and bother. Go over there. My 5 followers are not going to click on your link. Okay. Anyway, but thanks for trying. Okay. So let's see what we have here. Okay, cool. So back to the bond market, right? So you see, again, sell signal in the bond market. Anyone that ignores this, you're ignoring it, out of your own ignorance. There's a sell signal in an area. Look at that line that I drew. I drew this line like a week ago. That is a resistance level. We're getting a rejection in that area where a rejection was highly probable. Okay, so that means rates are still rising, and I anticipate that this thing tests the midpoint of the range. That's what I'm anticipating. That type of move can take a week or two to play out. We'll see how it goes. We may get a lot of noise along the way with this thing. Okay, if the bond market is not rising, which again, this is telling us that it wants to pull back. I don't know if it's going to make a new low, but it wants to pull back. Rates are still rising, right? So we're going to see a boost in the dollar, and that's going to be a bearish thing for other markets like the stocks. Okay, so again, nothing has changed in the bond market. I don't care what the experts say. There's all kinds of expert talk out there, and but he works for Bloomberg. Who cares? Okay, no one knows anything. Bond market tells us the truth, not journalists who write for some big mainstream nonsense. I don't care. Okay, they're not out there to help you, that's for sure. All right, so that's the bond market. Let's go to the dollar. All right, dollar index. Dollar index is fighting. It's not, people want to say it's bearish. Yeah, structure is bearish, the recent structure, which doesn't carry a lot of weight, okay, compared to this, right, the weekly. So nothing has changed here on the weekly. We basically, for the whole week, the dollar has maintained its green candle, right? And it looks right now, we can argue that it's sort of a bearish pin bar, but it's not really a pin bar. And even if it was a bearish pin bar, this is not a location for a bearish pin bar. Okay, so I would overlook the bearish pin bar because this is not the place for one. It's a place for a bullish situation, right? So we take out this weekly high next week. We have our potential leg higher on the dollar. How high does that leg go? I'm looking at this area right there. That's the short that I wanted for the euro, but the euro, it's just not happening, right? It doesn't cooperate, and I'm not going to continue taking risks on that thing. So back to the dollar. I like this candle. We take out this high, right, on Monday or whatever. We have a buy signal in the dollar. All right, that's a pin bar. So keep that in mind. Now, am I going to short the euro again on that? I don't know. I tried 3 shorts and they just very reluctant. They just don't want to go. So we'll have to see how that goes. Okay, that's the dollar. Now, speaking of dollar, let's just jump over to euro real quick. Okay, I'm over 30 minutes. Okay, I'm in you here, but I like your information. Cool, Bach, I appreciate that. Thank you. Oh, PP, and Bill says here, wait, that's because I use, that's the, yeah, it works, Bill. Cool. PPI was hotter than forecast. When was that out, Bill? Was that out today? Because I know Michigan consumer sentiment, either that is out or it comes out at 10:30. I'm not sure. I knew that was a number that was coming out today. I must have missed the PPI on the calendar, but I mean, or was that the other day? Anyway, a hotter PPI again is inflation, right? I mean, that's an inflationary number, and all that nonsense. Powell came out a week ago, Chairman Powell, and he's like, yeah, we're going to cool off we're going to raise rates less, and everyone, oh yeah, the economy is slower, and the Fed is going to have to cool off. And I don't buy it for a second. Okay, I don't buy it. And the charts don't back it up either. Right? I want to see evidence on the charts. If I don't see it there, then I don't care what anyone says. Okay, I don't care if they're the chairman of the Federal Reserve. Again, these people are not out to give us accurate and actionable information. They do not have a vested interest in our outcome. Stop trusting them. Okay, they're not here to help you. They have a job, they have an agenda, they just do whatever they have to do. So we have to rely on more objective pieces of information. A chart can help you with that if you know what to look for. Now, here's the euro, right? Look at this, Stian. I mean, I talk up to Stian because he keeps taking these trades. He tells me yesterday, next time you call a short, I'm going to go long. And if you call a long, I'm going to go short. I said, Stian, I should do the opposite too. I should do the opposite of my own trades too. But this euro sucked, man. I mean, I shorted both of these. Okay, I shorted this one, and this whole way up, it's just been nothing but problematic. And look, now we're getting the double top. Now again, here's what you have to be aware of, right? Because I took 2 full stop outs, it affects our decision, or it affects my decision making going forward, when theoretically it should not. I should be able to take 10 stop outs in a row, right? And not be shaken by the next. I should be just as enthusiastic or objective about the next entry. But as you can see, I'm becoming biased. I'm like, oh, I don't know if I'm going to take the next one, right? But look, now this is setting up. It's looking even better, right? We got the double top and this and that and whatever, and that bot and the dollar, as we just looked at, is poised to bounce. So I'm not going to call anything today, but well, again, like I said, we'll see about the possibility of this as another short potentially. Now, people are like, why would you short a strong market, right? Because everyone's focused on this, but that's not what the euro looks like on the bigger picture. Okay, when we go to the bigger picture on the euro, this is not exactly a strong market. Okay, this is just an irrational bear market squeeze. That's what that a bear market rally and those kind of things commonly happen in bear markets. We are still in a resistance area. I mean, look at the doji that's developing on the weekly. That's why, I'm not fighting the trend on the euro. It's just the trend is the bigger picture has not asserted itself yet. Okay, so keep that in mind. All right, man, Bitcoin's real quiet today, huh? Not much going on there. Signal was failed high plus failed break resistance. Okay. What are you referring to on that? Okay. Oh, short on closed out 1265 10 contracts. What are you talking about? What market? Oh, it was at 10 o'clock. Okay, Bill. Signal. Okay, I got it. Okay, cool. I'm not sure what market you're talking about. You're talking about what 1290? What is that? So anyway, so that's the story there. Now I don't know, Alice, if you're still here. I'll spend a couple of minutes to take a look at your charts here. So LMT and region. Let's take a look. LMT, right? What are you talking about here on LMT? Looks like okay. So it looks really solid. I own a couple of stocks. If I should take some profits here or let it ride. Okay. Well, so let's go to the weekly on something like that. I mean, look, you generally have a bullish structure, but you are in a vulnerable. This is a tough spot. Okay. So you have a failed high location plus a potential mini failed high right here and a weekly inside bar. It's not a bad place to take money off the table. If you want to let some ride, maybe let a smaller part of your position ride, but it's not a bad location, right? If you haven't taken something off the table, that's a suggestion that I would make on something like that. And region, real quick, REGN. Let's take a look. Again, I normally don't spend this time looking at stocks, but you're a long time member and supporter and stuff, so I don't mind. Again, let's take a look weekly, right? Let's go. This is the weekly. So here's the thing, right? Look at these locations. They're both pushing their highs, right? But look at the location and look at the weekly pin bar. Today is Friday, right? I mean, that's not exactly the best definition of a pin bar, but today is Friday, and look at the way that's going to close. So again, not a bad place to take something off the table if you have some. Bad place to be taking new positions for sure, right? Very high risk areas for new longs or anything like that. There's no reason to put more risk on here. These are good locations to reduce risk. Okay, that's all I could say about those things. All right, so thank you for asking about that. If you want to try to let a little ride, nothing wrong with that. But I don't know what your situation is. If you feel better about just blowing the whole thing out, okay, you know what? You're in a location where that's justified. If it goes a little further, no reason to feel bad, especially if you're taking profit off the table. All right. So good question. Thank you for asking. I'm going to go to the NASDAQ over here and look at the NASDAQ. Now, this is the weekly, right? Look at the line that I had drawn on there. This line has been on my chart, right, for some time here. Look at the reaction. Look at the reaction. So that's pretty significant for the week, right? Let's go to the daily chart here. And I mean, this is the behavior around that line. Look, right? This candle right here, this candle right here is the Chairman Powell candle. That's the Santa Powell candle where he tried to basically invite a Santa rally. And as we can see here, the market's like, not really. Okay. And now it tried to bounce yesterday with all this enthusiasm. And then look at this. So keep something in mind. When a market bounces off of a support like that, a higher low support, the next move should look like this. Okay. It should be full go like rally. Okay. It should be a large expansion pretty quickly. Not this. This is a doji, right? So we're getting indecision. What happened to all the people buying? Where are they? They just stopped buying. This is not a good sign. So, anyone that got sucked into those longs, if you got sucked into a long thinking whatever, I don't know what to tell you, but this is definitely not what I'd want to see if I was long. I'd want to see a candle expansion. All right, we don't have that. We're sitting on the support still. And you may hope it's support. It's good. Not really. It's not good if you have a move like this right before it. All right, so bearish momentum is still in play. This support is likely to break next week. Okay, this support here, and not good for longs. So that's a sign to mitigate your risk, do something, maybe tighten your stops, maybe get out of something, reduce exposure. I don't know what to tell you. As far as shorts go, this is a tough spot exactly for a short. This is more appropriate for options plays because you can control your risk better. It's not the ideal location. The ideal location is obviously the range high or somewhere near those highs. So this, again, you're taking a bunch of risk there. It might be best to just sit it out, okay, and just let this thing do something. You don't have to be in every move, and wait for a more decisive level. Okay, you don't always have to take trades. So a situation like that where it's like it's iffy on both sides, I think it's best to just sit it out if you don't have any exposure. Okay. Oh, in Euro, in Ethereum. Okay, cool. Well, that's good. I'm glad you're able to pull something out of that. Nice job. Okay. So next, all right. So I covered all the major markets. I'm going to do this. I don't have any trades in Bitcoin here because Bitcoin's not giving us anything. So I'm going to go to the 5-minute, okay, the NASDAQ here, and just to look at the correlation. All right. So this is not like a one-to-one thing. Now look at today's price action. This is the price action we got. What is this here? This is the open over here. No, that's 8:30. This is the 8:30 news right there, right? Look at the same. We got a similar reaction here. Is that also the 8:30 news? Where is the 8:30 news? This is 8 o'clock. Yeah, it's the same news, right? Look at this. So look at this price action. It's the same. It coincides. You see that? These markets move together, but they're not exact. Now look at the NASDAQ has been producing this messy lower high structure. Bitcoin, not so messy. Okay, I mean, you see that? It's a little clearer, but it's still, both of them are basically still consolidating in this area. If the NASDAQ establishes this lower high, if this lower high sticks, then it's not a good time to be buying Bitcoin. Okay, this location is certainly a bad place for day trades on the long side. Maybe we can justify the short side more, but like I said, I'm not crazy about the location. Yes, we have some sell signals there, but we determined earlier that the bigger picture favors the bullish side. So do I really want to be in a hurry to go short? No. If I'm going to go short, like I was saying before, I want to see some extreme prices. I want to see something extreme. So on the long side, I'd rather be looking for supports, right? And try to work with the long side because of the bigger picture, right? But if this NASDAQ just completely fails, then you may get that follow through here. You can use the NASDAQ as basically a warning gauge, because it basically leads, right? That's how I use that. Now notice I'm not taking trades on that. I'm just using it to get an idea. Okay. The trades come from the levels and the setups on Bitcoin itself. There's definitely similarities between professional gambling. You have to use the same skills. Well, that's true. In fact, there's a guy that I speak to. He's a follower of mine, and he's a professional poker player, and he actually teaches people how to play poker. And he said, a lot of the things that I was saying, he agreed with. Now, I am not a professional poker player by any means. I'm not a gambler in that way. And but I like to play the game, and I think it's a great exercise for developing the thought process that's required, especially as a day trader. And this guy agreed with me on a lot of the observations that I was making. And he was pointing out a lot of similarities that I noticed as well, between the decision-making process. Because, yeah, true, markets and poker are not similar in many ways, but the decision-making process and risk management is similar. And a lot of people overlook that because, they only grasp at the obvious. Oh, poker is just a game with a bunch of cards. The market's much more complex. Yeah, it is. But the decision-making process when it comes to risk is very similar, right? And I had a professional guy confirm that for me. Okay, so anyway, that's right, Bach, or basically how much you lose, right? How much you risk, how much you lose. That is what we have control over. And there is some skill in that. And that's where I agree where the skill is. The problem that I have with all these fake gurus is they imply the skill is in the charts. The skill is in using RSI and knowing how to use an oscillator. That's where they imply the skill. If you follow me and they show money. Oh, look, I made this much money. And if you want to make this much money, just follow my techniques. And that's the problem that I have, because they're just selling you a dream. Okay. And if you don't realize that markets are random, then here's what you're going to do. You're going to go pay for whatever, right? You're going to start using the oscillator and whatever other techniques he shows you, and you're never going to come out ahead. You're always going to be like, oh, sometimes I make money, sometimes I don't. How do I know when I'm going to make money? How do you know when to get bigger? How do you know all those things? You can't in a random market, okay? When it's random, you're playing a random game. So you need to understand that, okay? Anyway, so good points. I got to wrap this up now. Hey, people, and I see people, they're all signing out. Again, I hope you found some value in my stream here. There were no Bitcoin trades to take. Look at the NASDAQ. Look at the NASDAQ popping here, and look at Bitcoin. Do you see this? Do you see this? Watch the fake gurus copy me on this. But there is value here when this thing leads and this thing follows. I'm not taking trades, but this tells me, hey, breaking the lower high possible here, avoid the shorts for now. Okay, if a short setup develops right now, I should probably stand aside. Okay, we're not even at an attractive level anyway, right? That's what I drew these rectangles on here for. Those are the attractive levels. Those are the levels where I'm considering action, not in this midpoint area, which is highly random. Okay, we can flip a coin and that'll determine the outcome, right? It's a lot easier. You don't have to learn anything to flip a coin, right? That's my point on a lot of these things. You don't have to learn how to use an RSI if you can just flip a coin. So anyway, all right, you guys. So I hope to see you in my Discord community. Again, there's a lot of valuable information in there. Thanks, Bill put a lot of great stuff in my student area. Steen put a lot of good stuff too. He has some very interesting videos and stuff that I think people should be aware of, especially if you're new. But the student area is not free. So anyway, you want to join that, you can join my training program and all that, and you can learn what I believe are the most objective pieces of information that you can extract from a chart. And the idea is to give you perspective, right? So you have a better gauge of expectations, but more importantly, a better gauge of risk, because that's what this game is about, as we've talked about here. One thing I want to mention is I am putting together that portfolio, all right, for next year. This is a long-term idea, complete opposite of what we're looking at here. And they're more fundamentally based ideas, and it's going to be a mix of stocks mostly and altcoins. The stocks, of course, are going to be cheap stocks, right? We were looking for high growth. These are high risk, high growth stocks. If some of them go somewhere, they're going, we're looking at big returns. But the idea, though, is you don't put big money into that. That's a very common mistake. You put small money. Well, how much money exactly? I'm going to put all that information, for the members that are interested in that. Okay. So anyway, I'm not going to release all of that information at once. I'm going to work on each thing, each stock or each altcoin one at a time, basically. And I'm going to highlight some of them in these streams. So they're not going to be a total secret. I'm just not going to give away all the details on how I'm getting in, how I'm managing the inventory, all that stuff. That's for members. Okay. Anyway, you guys, so if you have any questions, you know where to find me. Send me a message or whatever, and I hope to see you in the community. Okay. So enjoy the rest of your day, the rest of your evening, wherever you are in the world, and thank you for watching.